I recorded a few interesting trades from this week. In this video, I'll break them down in detail.
What's so special about these trades that I decided to make a whole video on them? They're the perfect example of how to use technical analysis in real trading. Plus, I'll break down a few key details that beginners often miss, which leads them to making poor decisions. Why did I choose this pair to analyze? Just look at the impressive payout percentage. It's a remarkably high number. So let's pause and see what's happening with the price. This is the very first thing I check before even opening a chart, and it's exactly what most beginners overlook. On the chart of this currency pair, we can see that a breakout has occurred at a major resistance level on the 1-hour timeframe chart. After a strong upward impulse, the price movement has turned sideways. There's also a significant resistance zone that is preventing the price from continuing its upward movement. In most of my trading strategies, I only trade in the direction of the global trend. This situation will be no exception. To enter a trade, we need the moment when the price breaks through the resistance zone with a strong candlestick. What is a strong candlestick? In this situation, a strong candle that will help us profit is a large candle that shows the price's intention to break through the resistance zone. It's best to wait for it to form on a time frame of no less than 5 minutes, which is exactly what I'm doing. If you didn't catch everything, let me quickly recap. We are looking for a long trade because the global trend is upward. We enter the trade after breaking through the resistance zone. The expiration time is chosen considering the volatility. The breakout occurred during a strong volatile movement, so we choose 15 minutes to avoid potential price pullbacks. There's a significant downtrend that has been going on for 4 days. This means we'll be looking for opportunities to enter a short position. This is a crucial beginner's mistake. Always look at the bigger picture. Where has the price been moving over a long period? Right now, the price has broken through a global support level and is approaching the trend line. For the initial analysis, we'll look at the situation on the 1-hour time frame. What can we say about it at first glance? Look. The price spent the entire day trying to break through the support level. And finally, it succeeded. Afterward, it pulled back to retest that level, but bounced off. Notice the volatility as the price approached the level. Low volatility in this situation indicates that traders were hesitant to break through this level. Given that this is a high time frame, we can conclude that this level now serves as a strong resistance. That's one more point in favor of a short trade. Next, let's analyze the trend line. The price is moving steadily along the trend line, with the distance between the extremes being roughly equal. After touching the trend line, the price reacts strongly. Just look at those impulses after each bounce. All this indicates that the trend line is strong and the price is more likely to bounce off of it again, rather than break through. That's another point in favor of a short trade. Now let's take a closer look at the situation under a microscope. We're switching to the 5-minute time frame. We can see long shadows on almost every candlestick that was above the trend line. It seems pretty clear to me that the price doesn't want to stay above this trend line, does it? I think we're good to go. The analysis we've done is enough to enter a short position for 30 minutes. Let's go. Oh, those bulls are trying so hard to break through that trend line. But the bears just won't let them. As we expected, the trend line was not broken. I think we can take a little short break now. We'll continue very soon. Well, half of the workday is behind us. Several cups of lovely coffee have been consumed, and after a little break, we can continue. I couldn't help but notice a great payout percentage for this time of day on this currency pair. I had previously marked a significant support level, which I had established quite some time ago. Let's take a look at what's happening here together. Technical analysis starts with the most important step. Check the higher time frame first. So, we can observe the global downward price movement by selecting the 1-hour time frame. This means we need to find as many short signals as possible. First, we need to figure out if the price can break through the global support level. Let's take a look. The last time the price bounced off this level and moved up was on March 19th. It has now tested this level twice. We know that the more frequently the price approaches a level within a short period, the higher the likelihood that it will break through. Remember this point, and let's move on. And now for something a little different. Let's add some candlestick analysis. Take a look at the wicks of the candles on the 10-minute time frame. It's pretty clear that sellers are pushing the price away from the trend line zone. Just a quick reminder that we're looking at a 10-minute time frame here. I think this signal shows that sellers are really keen to keep pushing the price down, especially since it's been on an upward trend for quite some time. Let's switch to the daily time frame to confirm. Since the beginning of 2024, the price has been moving steadily upwards. From what I've seen over different periods, it looks like the price is going to keep going down. It's tested the support level a few times, gone down quite a bit after a long period of price increases, and then been rejected quite a bit from the trend zone. All of this makes me think that the price is likely to keep going down. I think a 30-minute expiration period will be just right, since there isn't much time left until the triangle's apex. And look at this! What seemed like a losing trade then turned into a win because of low volatility, as low volatility shifted to high. I'm so proud of you all. I hope you understand the importance of analyzing the situation across different time frames. It's not difficult, and these adjustments help you see the bigger picture more clearly. I'm starting to feel a bit tired, so let's make this the last trade of the day, shall we? What do we have here? A strong downward movement. Let's look for a short position again. I've noticed a support zone here, but you might ask, what level of support is that? Well, only about 8 candles have reacted to it. And my answer is, just look at the time frame. It's 1 hour, so I can assure you this is a classic, unpredictable support level. So, we have a global downward movement and a local upward movement of the price, which can be a bit confusing. What should we do in this case? In this situation, I'd say we should trade the reversal of the local trend in the direction of the global trend. All we need to do now is choose the right moment to get in. As you can see, the price is currently testing the support level. I think we should enter a short position as soon as it breaks out. We'll wait for the candle to close and then enter a short trade for 45 minutes. I've chosen an expiration time that allows for a possible correction at this support level. I think 45 minutes will be just right. It's really interesting how our analysis across different time frames has helped us make good trades. And right there is a common beginner's mistake. They don't look at the bigger picture. Every time I use this strategy, I feel like Dr. Strange working out the best way to beat Thanos. I hope you found this useful and that you'll think about using this kind of analysis in your own trading strategy. See you in the next videos, everyone!